From Kansas State University, this is Agriculture Today. Eric Atkinson with you, and here's what's coming up. From the Kansas Farm Management Association here at K-State, Kevin Herbel will review the results of a new survey conducted by the association of farm employee management practices in Kansas. Specifically there, the trends in wages, benefits, and total compensation provided to farmhands. Then, on the latest edition of FSA Coffee Talk from the Farm Service Agency, Josh Ritter goes over the basics of the USDA's Guaranteed Loan Program. And further ahead, this week's Wildlife Management segment, once again with K-State's Charlie Lee. This time, Charlie looking at a new study of the vegetative habitat that pheasants prefer for their nesting sites. All this and more next on Agriculture Today. You are listening to the K-State Radio Network and Agriculture Today. Glad to have you along. On this segment, a look at some numbers out of the Kansas Farm Management Association. Once again, that's based here at Kansas State University, as you know, and quite a reservoir of information on goings-on on our farms and ranches in Kansas. And today, we'll center on one particular consideration here, and it's very timely given the topical matter of farm labor availability anymore. Kevin Herbel is with us. He's the Executive Director of the Kansas Farm Management Association. What you have here, Kevin, is a breakdown of employee management on our farms and ranches as of 2020. Explain further the purpose of this particular analysis, if you would.
Sure, Eric. We have repeated this several times over the last 2 decades or so. Had an individual here at Kansas State University, Sarah Fogelman, many years ago, helped us put together a survey for our member farms looking at labor practices, wage rates, compensations, those type of things. And we've continued to update that a couple different times. We did again in the 2008-2009 time period, revisited that around 2014, and now here in 19 and 20 revisited that again. And certainly this point in time, as we have some labor shortages, certainly difficulty of finding individuals to fill some positions on the farm, very important to know and understand what is taking place from a wage rate, a benefits provided, just overall employee management. The value of long-term quality employees to a farm is hard to even quantify for many of those farms that have long-term employees. And we sought to kind of get a handle, an understanding of what was going on these KFMA farms, and an ability then for others to maybe benchmark, compare what's going on their farm. And for someone who's looking at hiring an employee and maybe hasn't in the past, what's taking place on other farms that they might want to consider as a part of their employment package they might provide.
So this was a dedicated survey on this topic, and you got it, a number of variables here. What were the primary things you were looking at here?
Well, certainly within this, the primary thing we wanted to identify was what's the wage level, what's being paid employees relative to pay on the farm. But along with that, also assessing the benefits that were being provided to those employees. As we think about employees on the farm, we have a wide range of different types of employees, from those who are full-time workers, those who might be part-time, in many cases more like seasonal employment, where they're helping and working with the farm during harvest, during planting time, livestock operation, maybe some specific times of that nature. The employee management on the farm is certainly a subset of the overall labor management on the farm. Mm-hmm. And the importance of labor management can't be overstated. It drives many decisions. The difference in many cases between some more profitable, least profitable farms can be in that efficiency of managing that overall labor resource. And, the main purpose, we have machinery and equipment, technology today, is to make our labor more efficient. Increases in farm size, the uniqueness of things within agriculture, the breadth of skill sets, the breadth of knowledge that's needed to be part of the labor of a farm operation. And in the midst of all of those things, those of us that are working to manage and oversee farms typically have very little training or feel we're very little equipped to be human resource managers. For many KFMA member farms, for many farms around the state of Kansas, that human resource management may be within family members. It may not be a hired employee. It's just how are we working together and completing the work that's needing to be done on this farm. And that in itself is very important and can be very difficult. This survey does not get into family members who are owners, operators of the farm, and they're working together, but rather looking at other individuals that may be hired to serve in some of those roles. And some of these individuals may be of some family relation or may not. And some may even in instances, as some of our survey shows, do have some ownership in the farm. But it's looking at those that are hired to be these employees working for the farm operators.
Well, within those parameters, then, how many employees were you able to gather information about?
For this survey, we had results for 248 employees. Those employees are on 109 farms. It ranges all the way from some farms with just one or maybe one or two part-time employees to a number that have more extensive employees on the farm. We did divide, and this is one of the things that I appreciated Sarah Fogelman kind of leading us to years ago, was dividing these employees based on competency level and just looking at what skill sets are needed, what skill sets do they bring, and how do those skill sets contribute to the role they play on the farm. So anyone who sees these results will see the employees identified as level 1 through level 5, the level 1 employees being ones with little to no experience, little training needed most likely for the tasks that they're going to be asked to do, and then just steadily increasing both in skill set needed, experience they have, and also the decision-making, the supervisory authority that might be there as we move up toward the level 5 employees, which in many instances, these are individuals that are employees on the farm, but they're given very much the same tasks, take on very much the same tasks as the owner-operators of the farm might have.
You do have some basic demographic information that you uncovered here, Kevin?
Certainly did have some of that. In the overall study, about 12% of these employees had some ownership of part of the business. And again, keep in mind, we are not looking at owner-operators of, say, a C corporation operation. These are not the operators and owners of the farm. But 12% with some ownership, 44% of the level 5 employees had some level of ownership in the operation. So very distinctly different there for those higher level employees, that there is some level of return to ownership that's being given to them. Very low levels of ownership of the levels 1, 2, and 3 employees. Age of employee certainly can be an important consideration within that. We had a range all the way from 12 years old to 80 years old in the employees that are in this survey, with the average at about 38 years. A consideration of the different skill levels ranged from approximately 25 years old average for the level 1 employees up toward 47 on the level 5 employees. So increasing age level with each of those groups, as well as an increasing experience level. And we looked at experience both involved in agriculture, experience with this farm, and experience in the specific position in which they currently work. The average experience with their existing farm was about 11 years. That ranged from 1 year with those level 1 employees on up to over 21 years for the level 5 employees.
Some of the things that you looked at then, and one of the first things that you wanted to extract from this survey was the kinds of benefits that accrue to the employees as part of their working arrangement. And those can take many forms, you say, Kevin.
They certainly can. And if we think about benefits with employment, those of us involved in agriculture are all very aware of the fact that there are many family members of a farm family who will work off the farm for the purposes of receiving benefits, benefits of various kind, but the value of those benefits is very frequently the reason why a family member may work off of the farm. Well, these individual families, individuals that are coming to work for us on the farm, those families aren't in any different position. So benefits are very much an important aspect of that employment. For those employees that do receive benefits, it's quite extensive in some of the instances here as far as the overall value of that benefit package to the total compensation they're receiving. And I think for many of us managing farms, it's very important if we have employees to just consider the type, the level of benefit that's going to be provided to our employees due to the importance of this, and very specifically with those higher level employees, those that are very important to you on your farm, those that you're giving some management role to, those that have been with you for quite a number of years. Consider taking the opportunity to talk with them relative to the benefits you provide and just have opportunity to hear from them. What do they value in those benefits? What might they like to see different? When we consider the types of benefits and just the range of that as it's provided to these employees, we found it very wide-ranging, one farm to the next, and what they provided. And I think it's important, particularly with those higher-level employees, to identify, is what we're providing to them really important to them, or would they see more importance in something else? And I know from some specific instances of interacting with farm employees, there are instances around the state of Kansas where employees may be receiving what the employer views as a very low-value benefit. They kind of don't even consider it worth much at all. And some of those lower value benefits are extremely valuable to those employees, and in some cases are why they stay with that farm for the length of time that they do.
Well, we'd like to break down those benefits as well as wage levels earned by farm employees in Kansas as per this survey. We need to take a quick break, Kevin, and we'll launch right into that if we might. Kevin Herbel is with us. He's the Executive Director of the Kansas Farm Management Association at K-State. We'll continue with this overview of this recently released survey on employee management out of the KFMA. After this break, you're listening to Agriculture Today. Agriculture Today continues now. Across the way is the Executive Director of the Kansas Farm Management Association, Kevin Herbel. And Kevin has been sharing some information that he has pulled together along with colleagues here at K-State on employee management on our Kansas farms and ranches. This in the form of a new survey of KFMA members and finding out how they manage their employee workforce. Kevin, we're now around to talking about specific types of benefits that would be earned by our workers out there in the farm or ranch. But some of the benefits that we'll talk about today will vary with the skill sets of the individual workers, per this survey anyway, right?
That is correct. What a employer provides employees certainly varies somewhat based on skill sets, somewhat based on how much time that individual is working with the farm. When we look at the employees, we're going to tend to focus here as we assess these numbers on the different benefit types on the full-time employees, as they're the ones where most typically benefits are provided as a part of that employment package. These benefits range from things that are common employee benefits that we might find in any industry, any type of place where employment is given and there are benefits. And then there's some that may be a little more specific to certainly a family-operated business, but then a farm-specific type situation. One of the things that's very, very typical across all of these farms and all levels and all number of hours there of these different employees is providing some level of meals at times of year, and that's a very common benefit that's provided largely there to help the activity of the farm operate more efficiently those times of year. These common employee benefits that are found in most industries would include things like health insurance, retirement program, profit sharing, in some cases providing of bonuses, and then vacation and sick leave. And we do have a number of farms providing those benefits to their full-time employees particularly. Health insurance, within those in this survey, about 28% of the employees receiving health insurance. About half that many at 14% with some sort of retirement program, 6% or so with a level of profit sharing. And just related to the profit sharing, maybe one thing that's not being picked up there, we did mention earlier on a number of these employees that did have some level of ownership in the farm. And I think here this 6% receiving profit sharing is referencing the farms where there is a very specific profit-sharing plan of sorts that's been put in place, those individual employees that do have some ownership of the farm would be sharing from that ownership level of some of the profits as well, and that would not be reflected in this percentage. Bonuses, a little over a third at 36%, providing some level of a bonus package. Just under half at 46% with vacation leave, and then about 20% with some level of sick leave being provided.
And that is for full-time employees. If one looks at part-time or seasonal help, the percentages tend to fall off rather sharply, don't they?
That is correct. It's under 5% on any of those categories for part-time and seasonal, and typically just a few employees here and there that are being provided any of those benefits. And I think if we were to dig into the specifics of those circumstances, there's likely some very specific reasons for those instances where that benefit is being provided.
Now, we can mention something here quickly. There are, on occasion, what you call farm-specific benefits. And where do they fall into the picture?
And those are going to come in as some of the highest value benefits that are provided to some of these employees. But the definition of those we're going to place as being housing and utilities, provision of some farm products, personal use of a vehicle that might be allowed, and then use of farm equipment, maybe buildings that are available on that farm or other facilities. Those did tend to, with some of these employees, be a fairly high value form of part of their total compensation. The housing, and again here going to focus on full-time employees, housing provided to 16% of those employees. In many cases, those were ones that did have some level of family relationship to the employer. A question that I've been asked by some regarding this is, well, where do H-2A workers fall into that? As there is a requirement with H-2A workers of providing housing, providing opportunity for either meals or food preparation and those type of things. We did not ask with this survey whether or not we had H-2A workers. There very well could be some of these employees that are H-2A workers, and we do intend to kind of follow up this release of this information with some further information when we put together an Ag Manager publication, and in a presentation at the Risk and Profit Conference later next month, we will focus on a couple of slides of information considerations for individuals that are thinking about H-2A workers. And in a time where we're somewhat tight for some, particularly in finding employees, looking to expand that available base of employees can be important. Come back to utilities provided for 10% of the employees. Farm products, a little more substantial. And here looking at things like a side of beef, maybe some pork from the farm production or whatever that might be. 43% of the employees receiving some level of farm products, about 17% with personal use available of a vehicle, and 18% with use of farm machinery and equipment.
All right. Lastly, not least, wage compensation to farm and ranch employees. You accounted for some trends there as well. Tell us how you went about this.
Well, within here, we were certainly asking these farms to just report to us what it was they were paying to these employees. We looked at it here again based on all employees and the different levels. Some employees are receiving an hourly wage and then being paid that on the hours they're working. Others are receiving a salary. And so when we look at an average wage rate per hour, we're taking those that were salaried and dividing it back on their hours worked per year. And we're looking at being able then to compare those directly with the hourly employees. As we look across those on the wage rate to these employees, the average was $16.49 per hour, so about $16.50 per hour for all employees. The range went from $12.40 as an average on the level 1 employees, and then just steadily increased to $17.85 per hour for level 5 employees. Looking at that based on full-time, part-time, seasonal, the full-time numbers actually are not greatly different from the averages. A large percent of our employees were full-time, so they're kind of driving the average, but it's just slightly more for the overall full-time employee at $16.69 per hour, and $15.84 per hour for average on the part-time, and just under $15 at $14.77 for the seasonal employees.
So then to pull this all together, you wanted to come up with some comprehensive idea of what sort of total compensation farm and ranch employees were receiving from their employers.
Okay, Eric, what we did was look at the value of those benefits being provided, certainly the amount being paid for a health insurance to be provided, the amount being placed into a retirement plan, those kind of things, fairly easy to value. A little more difficult placing a value on machinery and equipment provided and those type of things, but we sought to value what was being provided and then look how much was that adding to what's being given to these employees. So we had a average wage rate of $16.49 per hour for all employees. The average when we bring in the value of benefits is $19.18 per hour. The full-time employees, we went from $16.69 up to $19.56 per hour. And if we look at the full-time employees that are the level 5 employees, or those having some management duties, supervisory authority and such on the farm, the average wage was $17.83 per hour. And that, when we bring in the benefits, is $21.83 per hour. So about $4 per hour worth of benefits being provided to those employees.
You have this body of information. How do you hope this will be useful in interpreting employee management trends and, well, guideposts, if you will?
Well, certainly within that, I know there are many around the state who may have not had employees, and for whatever reason, whether it's expansion of size of the farm, whether it's age of the farm operator and a need to bring in some others to help complete some of the work on the farm, or those type of things. We have individuals around the state who have not been employers and are looking to become employers. And for them to know and understand some of what's taking place on farms, for what's being paid to employees, types of benefits given, those type of things, I think this can be very valuable to them. The other role it can have, I think, is for these employers on the farm just to know and understand, be able to benchmark where they're at, be able to think about where they're at in the management of their employees on the farm, and decide whether or not they would like to make some changes in what that employee's overall compensation package looks like. Am I managing them well in a way that's adding value to my farm and allowing me to reward them well on the other end for the work that they're doing for me on my farm or ranch?
Very well. The results of this survey, employee wage rates and compensation packages on Kansas farms. Good information, as always. Kevin, thanks for going over this with us.
Thank you, Eric.
He's the executive director of the Kansas Farm Management Association out of K-State. That's Kevin Herbel. We'll be back with more for you on Agriculture Today. Agriculture Today returns now. Eric Atkinson with you, and coming your way now, the latest edition of FSA Coffee Talk. We invite folks over from the Farm Service Agency State Office to visit about this or that regarding farm programs and associated matters, and this time it's another look at the USDA loan program. Joining us is the Farm Loan Chief here in Kansas for the FSA, Josh Ritter. Josh, you want to talk about, you say, today, the USDA Guaranteed Loan Program.
Yeah, I think it'd be a good time to talk about our Guaranteed Loan Program. Unlike our direct loan programs where loans are made and serviced by the government, FSA Guaranteed Loans are made and serviced by commercial lenders such as banks, credit unions, and farm credit system institutions. FSA guarantees up to 95% of the loss of the principal and interest on those loans. And in a lot of cases, the FSA guarantee allows lenders to make agriculture credit available to farmers who do not meet the lender's normal underwriting criteria.
Well, then what types of loans are available under the Guaranteed Loan Program? What can they finance?
Yeah, there are primarily two types of loans available under our Guaranteed Loan Program. The first type is our guaranteed operating loans, and those loans can be used to purchase livestock, farm equipment, feed, seed, fuel, and can be used for other operating expenses. And those operating loan funds can also be used to refinance debt. And the second type of loan available under the Guaranteed Loan Program are farm ownership loans. And farm ownership loans may be made to purchase farmland, construct or repair buildings and other fixtures develop farmland to promote soil and water conservation, and also to refinance debt.
Digging into the particulars a bit, is there a maximum amount under the Guaranteed Loan Program that a producer can borrow? And more about the terms as well, if you would.
Sure. Yeah, there is a maximum loan amount under this program. Currently, that limit is set at $1,776,000, and that amount is adjusted annually based on the rate of inflation. Loan terms will vary according to the type of loan and the collateral securing the loan, and also the producer's ability to repay. But typically, the maximum loan term for an operating loan is 7 years, and the maximum loan term for a farm ownership loan is 40 years. Also, that interest rate will be determined by the lender making the loan.
Also here, Josh, are there any fees associated with these guaranteed loans?
For most guaranteed loans, FSA will charge the lender a guarantee fee of 1.5% of the guaranteed portion of the loan, and those fees can be passed on to the borrower. There are times when that guarantee fee will be waived, and they'll be waived when the majority of the loan is to refinance a direct farm FSA farm loan, or the loan is made to a beginning farmer participating in FSA's down payment program, or the loan is made to a socially disadvantaged farmer participating in FSA's down payment loan program.
And a simple question here, but whom can apply for an FSA guaranteed loan then?
First, I just want to make it clear to the producers that apply that they will actually be applying for the loan with the lender they're choosing. Mm-hmm. Then that lender will work directly with FSA if the lender determines that they want to pursue an FSA guarantee. The producer does need to meet certain eligibility criteria to qualify for an FSA guaranteed loan. First, they have to be a U.S. citizen or legal resident alien. They have to have an acceptable credit history as determined by the lender. They must demonstrate the ability to repay the loan and provide sufficient security for the loan. They need to be the owner and operator of that family farm after that loan is closed. And they also have to be unable to obtain a loan without a guarantee. There are a few other eligibility criteria too, but those are some of the major ones for the program.
Very well. So if one has any questions about securing a USDA guaranteed loan through the cooperation of that commercial lender, they can certainly go to the FSA for further questions to be answered, right?
Yeah, I would say if a producer or lender has questions about this program, they should reach out to their local FSA farm loan office. And really, if they're already working on it together, it might be good for them to reach out together and talk to that office about the application process. Our guaranteed loan program offers a great benefit to both the lender and the producer, really. For the lender, the program reduces their risk, which in turn makes it more likely that lender will be able to approve a loan that would fall outside of the normal underwriting criteria. And if that lender is able to approve a more quote-unquote marginal loan with the help of this program, then that means that more credit opportunities are opened up for producers too. So we're helping them get with that lender and get loans. So really, I think it's a win-win program for the lender and producer involved.
We're speaking about the USDA's Guaranteed Loan Program. Of course, inquire initially through your local Farm Service Agency office and then in cooperation with the lender of choice that is participating and collaborating in this program, and the FSA folk can fill you in on all of that locally. Josh, thanks for coming over as always.
Thanks, Eric. Always good to be on the show.
He is Josh Ritter, the Farm Loan Chief, Farm Service Agency, State Office for Kansas, on this latest FSA Coffee Talk on Agriculture Today. We'll round this segment out with this week's edition of Milk Lines with K-State Dairy Specialist Mike Brooks standing by. Mike?
Today I'd like to visit with our Kansas dairy farmers and actually everybody in the state of Kansas about ice cream. In case you missed it, National Ice Cream Day was actually the 18th of July. So as you think about ice cream, you might be wondering, so how did this thing of freezing milk and cream together with some sugar, how did that become a thing? Well, it's kind of interesting as you look at the history of it. It actually started thousands of years ago. It appears as though the Persian Empire often put snow in a bowl and then covered it with grape juice. And then they ate that as a treat. So maybe this idea of have something frozen that has some sort of flavor actually dates back for several thousand years. Now, how did we actually get to the ice cream thing? Well, that probably came along a little bit later, but there is, I guess, some references out there of freezing dairy with salt and ice. And that dates back to before 1000 AD. So we do have references here that indicate that this has been going on a long time. Specifically, here in the United States, records show that Ben Franklin and George Washington and Thomas Jefferson all enjoyed ice cream. In fact, the Library of Congress actually does have Thomas Jefferson's original vanilla ice cream recipe. As you look at some of the other things that are important to the history of ice cream in 1920, that's when the first ice cream trucks hit the streets. So again, it's been part of our environment for a long time and part of our summertime celebrations. So what is the favorite flavor of ice cream out there? If you look at just across the United States, it would be chocolate, followed closely by vanilla, and strawberry and some of the other flavors are kind of a distant third in that grouping. I know here at K-State, if you look at what we sell the most of, it would be vanilla followed by chocolate, and then strawberry would be a distant third. So as we think about celebrating the dairy industry in the summertime, invite some of your friends over if you're a dairy farmer to share a bowl of ice cream, but also to share about your dairy farm and what you do every day to ensure that our customers have wholesome dairy products on the shelves when they go to the grocery store. This is Mike Brook with K-State Research and Extension.
Thanks, Mike. And this is Agriculture Today. For you now on Agriculture Today, our weekly time set aside to look at another aspect of wildlife management. Along once again is former K-State Research and Extension Wildlife Specialist Charlie Lee. Our topic of discussion this time, Charlie, pheasant nesting habitat. Bringing this up because, as you note, our pheasant numbers in Kansas have been on a fairly steady decline.
Yes, it's somewhat sad that the game bird, ringneck pheasant, has decreased in the numbers that they have across the state. When I look at some of the long-term averages, from the 60s, hunters were harvesting about 800,000 ringneck pheasants during the season. That's went all the way up to just a little bit over 1 million birds, but a 63-year average is about 600,000 birds. Even that's the envy of a lot of states in the nation, but when you consider that that's about half of what it has been at some times, and currently we're down there around 300,000 that are harvested, that's a pretty significant decline over 60 years. We've talked about many times, and many studies have looked at the reasons why ringneck pheasants have declined, as well as other birds, grassland birds in particular. We know that the reproductive success of wild bird populations is linked to a lot of different environmental factors and individual behaviors, including the habitats that they select. We know that nest site selection is influenced by lots of different factors at the landscape level, but it's also influenced at the microhabitat level by those individual birds. We know that those individual birds may not be selecting habitat for the best long-term reproductive success. We know that it's difficult for those individual birds to predict what the habitat conditions might be, regardless of the climate that's impacting that growth. So there are certain things that impact the habitat around that nest site. That pheasant has to be able to predict what that habitat condition is going to be throughout the egg-laying process and then through the hatching process.
You mentioned this term microhabitat earlier, and there was, in fact, a recent study. U.S. Geological Survey conducted this study in California, and it dug deeper into pheasant nesting habitat preference.
Yes, it looked at the microhabitat conditions around where the pheasants were nesting. This was a study, even though it was done in Central Valley of California, it was in an agricultural region. I think we could extrapolate some of the results and apply them here in Kansas. They captured 190 hen pheasants, fitted them with radio transmitters, and then tracked them through nesting seasons to look at what exactly was around the sites that they selected for nesting. It's important to look at that habitat selection because we need to come up with some way to get the ringneck pheasant population to recover. And I think most biologists will agree we have to start with having good nest sites get a lot of eggs laid, and have good success in getting those young hatched and into the fall population.
So what did these researchers find in as far as the cover that will promote that?
Well, they looked at those habitat characteristics that were at those nest site conditions that included things as vertical cover and horizontal cover, the height, and then the types of vegetation that was present, whether it was perennial grasses, annual forbs, perennial forbs, bare ground, shrubs, rushes, water, lots of different things. More than 20 variables were looked at. Their goal was to identify the key factors that contribute to wild pheasant fitness by linking the individual level selections of each one of those nest site characteristics to the survival of those nests in the Central Valley. The results were really not that surprising, that found that female pheasants tended to select nest sites with greater proportions of herbaceous cover and avoided areas with greater proportions of bare ground. Specifically, the perennial grass cover was the most explanatory factor with regards to nest survival, but selection for visual obstruction was not shown to have a significant effect on the survival. So there was strong evidence that the pheasant selected sites that had greater perennial grass height were the most likely to have successful nests. So I think one of their conclusions was that pheasants are going to select many different types of vegetation as cover, but those that are most successful are those that have perennial grasses that are somewhere in the 10-inch height range.
So this can translate into land management to encourage that perennial cover?
Well, there's been a lot of work done looking at ag management techniques, and there's some very successful recommendations in Kansas or in the wheat fallow rotation systems that was developed, and some good information come out of that. But regardless, I see too many wheat fields out there that are weed-free. Personally, I think weed-free wheat and sorghum are some of the least preferred nesting habitat that we have in Kansas, and as a result, we're not providing that ideal nesting habitat sites that we should be to try to get pheasant numbers back up.
So if recovery is a goal here, some actions will have to be taken.
Well, keep in mind that the key to populations lies with private landowners. Most of the habitat is on private lands. Their management actions are going to continue to play a role in wildlife populations. I realize that economics certainly also has to play a role, but hopefully through additional research we can figure out ways, manners, techniques that improve not only the bottom line for farmers and ranchers, but also the exact type of nesting substrate that pheasants need.
And this new study, just out of the state of California, shed some light on those very needs. So, Charlie, thanks for going over this important matter in as far as pheasant conservation in Kansas. Longtime wildlife specialist Charlie Lee of K-State Research and Extension. Charlie's aboard with us each Tuesday right here. Well, on tomorrow's broadcast, among other things, a visit about wheat seed issues, possibly carrying over from the just-finished harvest. From the Kansas Crop Improvement Association, based here at K-State, Eric Fabricius will be here with an important word for those of you saving back seed for planting this fall. That and more on tomorrow's agenda. We hope you'll be back with us then. Meantime, Eric Atkinson bidding you a good day for Agriculture Today. This is the K-State Radio Network.